Look at a modern urban skyline. Behind the glass and steel are thousands of individual units, long-term leases, and millions of dollars in physical assets that require constant, meticulous management. In the daily rush of managing these properties, a leasing agent might accept an expired tenant ID, or a mechanic might pull a replacement valve without logging it. On their own, these look like minor administrative hiccups. At scale, they create a cascade of hidden financial leaks. The root cause of this strain is structural. The maintenance team, the leasing office, and the accountant do not share real-time data, leaving departments to function as isolated islands. Hinawi ERP changes this operational architecture. It acts as a digital nervous system for the entire business, instantly connecting physical actions in the field directly to the accounting ledger. Waiting until the end of the month to catch a data error destroys your profit margin. Financial security depends on preventing the mistake at the exact moment of origin. The operational journey in Hinawi starts with opening balances. This process anchors the software to the exact physical reality of your buildings, occupied units, and current tenant contracts. Once that baseline is set, the system acts as a strict legal guard. If a leasing agent tries to onboard a new tenant using an expired identity document, the software automatically blocks the lease from being created. When the documentation is approved, the system transforms the text of the lease into a living financial schedule. If a tenant moves in on the 14th of the month, the system calculates the prorated rent in exact daily fractions. It applies VAT regulations instantly, removing human calculation from the process. It also automates the tracking of post-dated checks and deferred income, mapping out exactly when each payment will clear over the entire lifespan of the contract. A lease in Hinawi is an active financial engine that strictly dictates and protects future revenue. On the active job site, heavy machinery and vehicles require constant, measured maintenance to remain both operational and financially viable. When a machine requires repair, the work order pulls the historical profile of that specific vehicle, showing every past service and part replacement. As the repair happens, the garage module pulls mechanic labor hours directly from the HR and payroll module to calculate the exact human cost. Simultaneously, it deducts the required spare parts from the inventory module, calculating the exact material cost of the repair. The software then routes the accounting. Company vehicles are capitalized to fixed assets, while client vehicles generate direct invoices for labor and parts. Maintenance is a precisely measured operation where every single bolt, filter, and minute of labor is fully accounted for. This relies on automatic posting, the invisible wire that links every field action back to the accounting department. At the exact moment a lease is signed or a work order is closed, the general ledger updates in real time. This eliminates manual journal entries, which immediately removes the risk of human transcription errors. The system also maintains integration with external financial platforms like QuickBooks and Liquidbox to keep external reporting perfectly synced. Because of this integration, the property manager, the head mechanic, and the chief accountant all speak the same financial language without ever holding a meeting. This state of alignment is called operational maturity. It occurs when a business no longer relies on individual memory or disjointed spreadsheets to function. The software enforces a silent internal control, stripping away the ability of users to make unapproved financial decisions. By locking in correct procedures at the source, the system provides executives with automated, strategic forecasts based on real-time field data. Adopting Hinawi ERP is the adoption of a methodology. It strictly governs the present to provide the structural discipline required to protect a company's long-term margins.